What are you doing?
What? Aren't we starting something?
Oh, hey, we're on the air. Welcome, Pearl and Andy Lockwood, Lockwood College Prep. Greetings. Hello to you, the lovely Pearl.
Oh, hello, Andy. Hi, everybody. Welcome.
So tonight we're going to be talking about a couple things, but the unifying topic is we're talking about getting money for college. So about 2 weeks ago, I ran a webinar describing the ins and outs of grants and scholarships. A lot of people missed that. A lot of people showed up for it. So that's really the bulk of tonight's webinar, is just to do sort of a quicker version of that. But since then, President Biden has announced his loan forgiveness proposal, which I should point out has not been officially disseminated or approved. And there's sure to be some legal wrangling about whether he has the authority to do this or not. But we've been getting a lot of questions. You probably have a lot of questions too about what the current program looks like. And the good news is that we have a real expert here on loans and financial aid. Not me, that's Pearl. So why don't you start just kind of running through the basics of it? I think a lot of people probably know.
Just basically like what is borrowed and what's a student loan, and kind of currently the landscape on interest suspension and that.
I think let's talk about the proposal first. Mm-hmm. Then we'll get into. I mean, that's it's great to have loans suspended potentially for some people, not necessarily for those of us, present company included, who paid six figures worth of student loans off. That's a whole nother issue.
But we're not getting into that discussion tonight.
No, that's off the air, right? but we see. I actually see both sides. I think you do too. There's pros and cons to it. So we want to talk about that. We want to answer your questions. So please introduce yourselves in chat. Let us know that we're coming in loud and clear, and then we'll shift to the other better sources of money for college, which is the free stuff, which is grants and scholarships, because there's a whole financial aid system out there. There's merit aid that is a different system. There's a little bit of tax types of what our accountant Rick, the ancient legend. He calls himself the legend. I call him the ancient legend. What he coined the phrase tax scholarships, which are really for business owners. So we'll talk about that a little bit. But we really want to be here to give to cover the basics of what's happening in the news and answer your questions. And then if you're interested in talking to us privately, one-on-one, in terms of how to work with us, if you are interested, we'll cover that at the end after we've gone through the educational stuff. And that'll be approximately 35 seconds worth of sales pitch for something that you cannot buy. Okay, so who is here in the chat? Let's know that you can see us and hear us. Chris in Wayne, Pennsylvania, and Christine from Parts Unknown. I don't know if is that our Christine, or is that another Christine?
I'm not sure.
Yeah, it's hard to tell.
I'll take a peek.
Miriam from Florida. She's actually a client of ours.
It's our Christine.
It is our Christine. Okay. Did you just wave at the monitor or the camera?
The camera.
Okay, good. All right. Jill and Peggy. All right, so I'm assuming we're coming in loud and clear, and you can hear us and see us. So, all right, why don't you start with sort of the basics in terms of what was announced, and then we'll talk about who it pertains to, and we should talk about who it doesn't pertain to.
Yep.
And we'll kind of not talk about the legal challenges to it, because that's out of the scope, but this could change. But the timing in general. So go ahead, take it away.
So there are two parts, actually three parts of the loan announcements that were made a couple weeks ago. I'll get to the actual student loan forgiveness. Before that, the first part of the announcement pertains to, for those of you who are aware or unaware, for the past 2 years, the interest rate on both the student and the parent loan for both subsidized and unsubsidized loans, the interest has been suspended. There has been zero interest accruing for the last 2 years on all loans that have been taken out during these last 2 years. And that suspended income was expected to be lifted on August 31st, 2022. And that is no longer happening. That suspension is continuing until December 31st, 2022 for its final time. It has rolled out in increments of 6 months, starting about 2 years ago, where they continually suspended the interest on both the student and the parent direct loans from the government. So again, so the first part is that the student and parent loan interest rates, which are currently for this current year, the student rate is at about 4.9% interest, and the parent rate is at 7.5% for the 22-23 school year. Those interest rates have been suspended all this time, will continue to be suspended until the end of December, and then come January, the interest will resume on these accounts. Okay, so that's part one. Part two, the biggest part, I guess, is the student loan forgiveness. When is it going to happen? When can you apply? Who qualifies? Okay. So single borrowers, an individual, if your federal adjusted gross income is $125,000 or under, or it is $250,000 for households, dual income. That is the income threshold for eligibility altogether. And whether you qualify for, it's either $10,000 or $20,000 is based on whether that borrower had ever received a Pell Grant. So
and just to ask, and that income is you got a choice. You can pick either 2020 or 2021 income.
Right.
Which is crazy.
Yeah, exactly.
Because there's people, for example, who are like doctors with all sorts of grad school loans. Right. And they were residents in 2020, and then they started, work at the real jobs in 21 and made $350,000.
Right.
One of the criticisms.
Right. It's going to benefit some, and it's going to not benefit other people who were in the same place. So that's the first thing. The actual application, of which we haven't seen yet, is not available for the public yet. We don't know exactly what the application is going to entail, what's involved, if there are additional requirements here. But that application for loan forgiveness will become available this October, and you will have until December 31st, 2023 to apply for this loan forgiveness. Okay, so that's the everyone. Then there is like another public servant forgiveness in addition to this that one may be eligible for. But that application, if you work for a nonprofit, if you work for the state, if you're a teacher, if you're any kind of public servant, you may be eligible, right, for student loans forgiven under what's called the Public Service Loan Forgiven Program. And that has its own site, but you have to get those applications in by the end of this October 2022 in order to be qualified. It's a very limited, one-time only public servant forgiveness. That's a separate from the general one I just described with the $250,000.
So is that part of the announcement, or is that already pre-existing?
It's been pre-existing for a little while, maybe a month, maybe since August, like only a couple months, since 2 weeks ago.
And speaking pre-existing, so these, as far as we know, correct me if I'm wrong, these are for loans that are already out there and borrowed, not for anyone who's about to take on a loan.
I have not seen information one way or the other today. It would make sense because I would think everyone, but I don't know, crazier things have happened lately. Okay. And then the third part of the loan forgiveness plan, the Biden-Harris loan forgiveness plan, has to do with repayment. So right now, here's how the loans work. You can take out, students are able to, in their freshman year, in their own name, able to take out $5,500. In their sophomore year, that amount goes to $6,500. Junior year, senior year, it's $7,500 each year. And for every continuing year of undergraduate one needs, it continues at $7,500 each year. That the student can borrow in his or her name. The parent can borrow either a specified dollar amount or up to the cost of attendance as determined by the school, which is basically everything, room, board, tuition, the whole thing for a year. There are no payments that need to be made before 6 months until 6 months after graduation. Okay. But there are no prepayment penalties should someone want to make some or all of the payments beforehand. Okay. That's how it works right now. When it is time to repay at the 6 months after graduation, there's going to be an option as to how you want those monthly payments to look. There's a standard, flat rate. That's going to be one type of payment, or, and this is what this new proposal deals with, or it can be income driven. Your monthly payment will be determined based on your income that exists when it's 6 months after graduation and you are required to now make monthly payments. So currently, loan balances are forgiven after 10 years of payments. Now, this is the proposal, whereas currently it's after 20 years. This new proposal will require borrowers to pay no more than 5% of their discretionary income monthly.
Instead of 10%,
right, which
reduced.
is the current,
Yeah.
right? It's been reduced. If you have a loan balance of less than $12,000, then after making consistent payments, well, it used to be after 20 years, you would get forgiven the rest. Now it's only after 10 years of those consistent payments. Let's see. And then there will be no borrower's loan balance will grow as long as they make their monthly payments, even if that monthly payment is zero, because their income is so low. So that is all part of the proposed income-driven repayment plan, and of course the loan forgiveness itself, and the change now, the suspended interest on these loans is coming to an end this December.
All right, so we see some questions coming in. I've been marking them as questions. You'll do the same.
Sure. Yeah,
So we're going to answer them, on the fly. But if you're just joining us, we're talking about really getting money for college. But first, we're talking about the new Biden. I didn't realize it was Harris. Sorry, Biden-Harris. Yeah. Okay, such a stickler. Very thorough, my pearl.
Try.
Loan forgiveness program. And there's a bigger picture here, which is what's this going to really do? Who's going to benefit? We'll talk about some of that stuff, but that's not really the point of this, especially because we expect legal challenges to this, and we'll see what happens when the regulations actually come down. What are these, like pre-regs? I mean, I guess they're sort of like, they haven't
proposals.
They haven't been officially enumerated, but I don't know
right?
who's going to be commenting on them. But there's a lot of comments on both sides of the aisle and other
there are
places.
A couple of committees.
Yeah, committees to have committees. Yeah. So anyway, so we're talking about that a little bit, and then the rest of the picture, the bigger picture is like, well, how do you get money for college that you don't have to repay? How do you get grants and scholarships and all that? So we're going to be talking a little bit about that. This is sort of a mini abbreviated version of the presentation I gave last week, which some people here saw, some people didn't. So either you'll be reviewing that information or picking up some new info. Which I do a lot. I review the same thing over and over again. Or it'll be new to you, but we're just going to kind of zip through it and then take your questions, and then we'll call it a night. We'll try to keep this, to an hour, and we're already 15 minutes into it. So the bigger picture is, college is ridiculously expensive. You've got schools like Columbia, which publish a total cost of attendance of $88,967. If you were to multiply that by 4, assuming no inflation, which you should not, but you're close to $344,000. And Pearl already showed me a student's award from Columbia this year that was $99,000. That listed the cost of attendance at $99,540 or something. So college is ridiculous. Same thing with most private schools. Northeastern's another one. NYU, of course, really expensive. Tulane is really expensive, but they say on their website it's a great value. So I guess it's not that expensive if you convince yourself it's a great value. But in sharp contrast to that, I just saw a stat in one of these articles about the Biden proposals. 41% of students between 22 to 27 years old don't have jobs that require a college degree. So there's a rampant problem with that, and questioning the value of college education. I think that's really the big picture here. It's to me, it seems very obvious that the easier it is to lend money, whether or not it gets forgiven, But even more so if it's forgiven, the easier it is to get money from the government, the less likely it is that colleges are going to rein in their costs. Because why should they? If they can, if it's like a geyser that's just spewing dollars out, it's like a gold rush for them. Why should they ever stop? It's really easy, and you do this all the time. It's really easy to borrow $50,000 or $80,000, or if you're going to grad school, $150,000 from the government. It takes like minutes to do that. There's no credit underwriting. No. There's no, so
it's unlike any other loan that you're going to try to get. It is the easiest loan to get.
I wouldn't lend my kids money that quickly, So why would a college rein in its costs to do that? I don't. So even without this type of dynamic, or maybe partially because of it, college costs have increased higher than the cost of living, at a greater rate than the cost of living. So we're in an inflationary environment, and in my opinion, in a recession, although the president doesn't seem to think so. But that doesn't mean that colleges are going to rein in their costs. They never have. They usually college costs outpace inflation, like over the previous 20, 25 years. So don't bet on colleges reining in their costs, especially now with this loan forgiveness.
Right.
So not all bad news. The other thing to understand is that the average discount at a private college is 54.5%. That's the average tuition discount. So even though costs are escalating, that doesn't mean that colleges are giving less money away. It's sort of a weird thing. It doesn't quite work in lockstep with each other, but it's not all bad news, because there's a lot of money out there. There's a lot of bargaining out there. Only roughly 25% of families at any given college will pay full price. The other 75 or 70 to 75% get some sort of discount. Maybe not as much as they want, but they're not paying sticker price. And paying full price is really, it's not an obligation. It's a choice. And the other thing is largely because of the pandemic and the common application and a few other factors, there's so many applications going in now per student. We've actually dropped in terms of the total number of kids applying to school, to college after high school, but we have increased the number of applications per student. So there's more uncertainty from the college's standpoint in terms of who they admit and whether they will actually show up, which is really important, that ratio of who is admitted versus who shows up. So that to me means it's easier than ever, and we saw this last year and the year before, it's easier than ever to negotiate with these colleges. So I'll talk a little bit about that also. I'm going to jump around with some of these slides that I did, just in case a few of you have, were on the presentation last week. But the reason why you probably never heard any of this stuff from anyone else besides us, I'm assuming, is because guidance counselors have no training in this area. CPAs are too busy with the tax laws, which are also changing massively. And the enforcement of the taxes apparently is changing with the 79,000 gun-toting
armed,
IRS.
right?
Yeah.
Wait, I will point out that audience member Chris pointed out the IRS new hires should be 100% deployed to investigate college and university cost increases.
Funny.
I agree.
Very funny. Financial advisors also too busy, and other parents. We hear a lot from other parents. We hear a lot of comments from people that we know who say, yeah, so-and-so told me not to bother applying for aid from Boston College because they don't give any money. And there are some people they don't give any money to, and there's some people they give a lot of money to, right? So other parents are not always the best source. And, of course, colleges are not going to tell you how to get more money because they're businesses, right? Who would say, hey, here's how you can pay me less voluntarily? So what it really comes down to is understanding the financial aid formula and the expected family contribution, or the EFC. So what is the EFC, Pearl, and what is it not?
So the EFC is not, I'll start with what it's not. It's not what you're going to pay. And that's a big misconception.
What does it stand for, though?
It stands for expected family contribution. And it is the number that the FAFSA, that when one submits a FAFSA,
what's the FAFSA?
And the FAFSA is the free application for federal student aid. And when one files a FAFSA, there is a confirmation page. That confirmation page spits out a number called your EFC, which is what the government deems based on your income and assets, your family's income and assets, and a bunch of other metrics, what your family can pay for 1 year of school. That number is, there's very little to reality and financial reality and what anyone would actually be able to or be comfortable paying for a year of school. But unfortunately or fortunately, whatever it is, that is the number upon which schools, it's not what you're going to pay. It's the number that the schools start with when beginning to put together a financial aid package for your admitted student.
So that discrepancy between what they expect you to pay and what you actually pay surprises a lot of people. Yeah. So you will not be surprised if you go ahead and you prepare and file your own financial aid applications if you choose to do that. It's another reason I think that they are why the government is changing the term from EFC to SAI, Student Aid Index. It's the same thing, but they needed a new acronym just to freshen things up. And but it's not going to create that expectation of this is what I'm going to pay. That's probably the reason, right? Mm-hmm. Yeah. So either way, no one's really happy with their expected family contribution, but it includes 70-something factors. Income is a big one, and currently that includes all income. There may be some changes next year in terms of not counting some untaxed income. Right now, it's pretty much all income. Your savings and some types of savings penalize you more than other types. I'll talk a little bit about that in a few moments. Number of children in college. The more, in general, the more children you have in going to college simultaneously, the better you look in the financial aid formulas, unless that changes next year. That's supposed to also change, but we'll see. So there's a lot of stuff happening. It's not just the Biden stuff. What else? How old you are, age of parents, and a bunch of there's separate rules if you're divorced or not. There's separate ways to calculate the value of your business if you're self-employed. So there's 77 supposedly 77 factors that are fleshed out by more than 1,100 pages of regulation behind this FAFSA, which Pearl pointed out is the free application for federal student aid. And that's the easy form. That's the federal form that every college in the country takes. However, you think it's like 400 colleges. I keep thinking it's like 300 colleges, but there's another financial aid application. By the way, this is the simplified version. Okay. So trust me, you don't want the full version because that would take us to 12 o'clock. The CSS Profile is the other form that mostly private institutional colleges that have their own money to give out that they require because it's twice as long and 10 times as hard and invasive as the FAFSA. So you have to check which forms, plural or form, your college requires. If they require the CSS Profile, they're also going to take the FAFSA. It's not an either or, but most colleges take only the FAFSA. So the point here is tip number one is understand which forms the colleges take and how they calculate your eligibility. And again, if you have questions, pop them in here. We may get to them. We may not in the regular lecture, I guess. But if we don't, we'll try to answer them as best we can. So a lot of people are not happy with their expected family contributions. So what do you do, right? What do you do if it's too high? Well, there's really only, I guess, 4 things. One is you could figure out how to reduce it. There are strategies to reduce your expected family contribution because the less they expect you to be able to pay, the more eligible you are for aid. You could pursue merit aid. Merit aid is really anything that's not need-based. It has nothing to do with the financial aid applications. Some schools may still require you to file them, but they're not. Your merit awards, your kids' merit awards are generally based on academic credentials and achievements, but sometimes other stuff like community service or being of a certain background or orientation, or there's different merit scholarships that come from colleges. If you're self-employed and high income, there are tax scholarships. I talked to someone yesterday, very interesting conversation. She was driving somewhere in Virginia, I think, and she's a surgeon, and her husband is a Division I basketball coach, and there's no way that they're qualified for need-based aid, but because she owns her own practice, she might actually, through some strategies, be able to save more in taxes than you could ever get from the financial aid office. Right. So, so that happens frequently. And I guess the other alternative is you can pay full price, right? But
it's a choice.
Yeah, that's not really a strategy. Yeah, it can be. I mean, if you're nervous that a school is not going to admit your child because you're applying for aid, which is definitely, it's not that simple, but there is an element of truth to that. Then what a lot of people do is they don't apply for aid, and the kid gets in, and then they say, "Oh, I forgot to apply for aid." Usually, that is past the deadlines for financial aid, which I'm going to ask you about in a minute. The final thing on the expected family contribution, the number that that they use to calculate your eligibility and therefore how much they're going to give you or not give you, is that you need to understand that money in your kids' names, like custodial accounts, penalize you far more, 400% more than money in your name as a parent. And furthermore, there are some types of assets that are entirely exempt that don't penalize you at all. So what we do sometimes, and this is not all the time, okay? That's what sometimes means, is with a sliver of clients, maybe 20%, 25%, we look at sheltering legally and ethically the money they have saved in the wrong places and potentially depositing it into places that are exempt. There's 4 exemptions, 4 places where the FAFSA won't penalize you. The 2 main ones that we see most frequently are insurance, life insurance products with cash value, so not term, and annuities. Those are the 2 shelters that we see employed most of the time out of the 4. So let me stop there. Are you guys finding this helpful so far? Because I know we're just dumping a lot of stuff on you. It's almost like it's 2 different presentations. One's on the loan stuff, and now how to get the rest of the money that's out there. So let me know in chat. And it looks like you got a lot of questions going.
Yep.
Okay. Is there anything you want to add on EFC or anything?
Well, I'm just going to touch on a note. Cautionary tale about net price calculators too.
Good.
I've had a couple of clients recently talk to me about what their expectations are after they've used a net price calculator on a school's website as to what their family would pay.
So to explain what that is, because there's some people who've never heard that term or been on a website.
So schools often have their own.
Always, it's required. Actually.
Okay.
Yeah.
Oh, is it?
Yeah, the Obama. Yeah,
oh,
Obama made that required.
Okay. Each school is required to have their own net price calculator on their site, which provides an opportunity to put your family's income and asset information in to the best of your ability, which will give you it's supposed to give you a rough idea of what your family is likely to have to pay at that school. However, whether it's a combination of being able to put the information in correctly where you're going to get the right feedback back from that formula, or you've put all the accurate information in. Unfortunately, I have seen that what ends up happening in actuality after financial aid forms are filed and awards are given, it is different, often worse, than what the net price calculator that the parents initially used on the school site indicated.
But they're a good starting point. They are absolutely helpful in terms of you trying to figure out whether you have a shot at getting something or not. And frankly, after you get an award and you're trying to improve it, which is the negotiation part, then one of those arguments might be, well, I relied on your calculator and I came up with this. Please explain to me how you came up with your number. So, all right. All right. I think Peter should be muted.
I
ejected.
Yep. See you later. You've been kicked off the island, buddy.
Yeah. How do we do that? Can we eject someone from the room for a comment?
I deleted her.
Yeah. Good. So hopefully you guys are finding this helpful. I can tell from the questions that you that at least we're touching a nerve here. So, all right, so let's talk about when these are all due. So the FAFSA and the CSS Profile are released in
October 1st each year, right?
So when do they due?
So they are due when the schools that your student is applying to tells you when they are due. And what I mean by that is your student is going to have to choose how the student is applying to the school, be it regular decision, early action, early decision, restricted early action, whatever the case is, whatever that application status is going to determine what that student's priority financial aid deadline is. Now that date is likely to be different than the application for admission date. So those are not the same, and they each need to be abided by. So if a student is applying early action at one school, that's going to be one financial aid deadline. If they're applying to regular decision to that school, it's going to be a different priority financial aid deadline. The best source is the school's own website for the current information. Don't go by last year's information and deadline. Make sure you're looking at how the student's applying on the school's website. And my own personal practice is I get a whole list of schools. I look at each priority financial aid deadline for each school, and I apply to all of the schools in accordance to the earliest priority financial aid deadline of all the schools.
So you have to keep track of all this stuff. That's the bottom line. You every year we hear from people who thought, oh, I didn't know to apply for financial aid until I thought I was supposed to wait till I heard whether we got in or not. Right. No. The applications go in. If a school rejects you or your child, then you're not going to get a financial aid award from them, and it doesn't go anywhere. That's fine. But look up all the deadlines prior to applying for financial aid.
And on the contrary, if your student applies to a school and submits financial aid forms and gets into that school, even if the award were to be made entirely of loans as an offer, that student will receive an award. Any student who applies to a school, gets in, submits financial aid forms, will get a financial aid package from that school. It is not the case that, I didn't get anything, I didn't hear anything, I guess I made too much because I didn't hear back. It doesn't work like that.
All right, so now we're taking you up to the time where you file, where you complete these forms. Again, the FAFSA, currently the main form is 104 questions. It's slated to be streamlined. The CSS Profile is 200 to possibly 300 questions. They have to agree with each other. That's another big mistake people make. And that could cause not an audit, but a verification.
Right.
So there's a lot of stuff you're submitting that could get not IRS audited with guns, but verified. You could be selected for verification. If that happens, they're looking for stuff. They're looking for discrepancies. And sometimes it's silly stuff. Sometimes it's not. So you have to be very careful that you're filling out these applications the right way and that they're consistent with each other.
Yes.
So we talked, so we talk about strategies so far, like you can shelter, money and improve your eligibility, get more, but you also need to be very aware of just doing everything correctly. You have to be hyper vigilant and careful. Don't mix up the stuff the information you give for your kid versus your information. There's a student information section. There's a parent information section. Again, student assets, student savings penalize you far more than parent assets. So if you mix that stuff up, you could be sabotaging yourself and stealing from yourself, basically. So what happens now after you file, and we talked about this last night with our clients, what happens after you file your financial aid applications? Are you done?
Carl? So
loaded question.
You are not done. Okay. In fact, I often describe the filing of the financial aid forms as the beginning of the process. Even though we collect all this information, we got it together, we file it, and you will receive confirmation emails when you do file. But really, at that juncture, each school has been officially triggered by this financial aid application to begin preparing a financial aid package for that student.
Really hate when you use the word triggered.
Sorry. To that end,
triggers me.
Still going to use it. I'm going to trigger you. Okay. To that end, some schools may want no other additional information because they have enough in the four corners of the application. But other schools, just based on how they do their own financial aid analysis, because all schools have independent, distinct processes for determining a financial aid package, will either have its own process for asking you for more information just naturally because it has additional forms it requires of all students, or there is something in your financial aid application that triggers additional questions. For example, if you own a business, there is likely from some of the schools to be follow-up questions about the business, and you're likely going to have to submit what's called a business farm supplement. Again, there are
well, it doesn't mean, sorry to interrupt, doesn't mean that you're missing something or that if you prepared the applications, you forgot something. It means there's more stuff.
There's an evolution of this process. Yep. Exactly. We submit some stuff and then they look at that stuff. And then therefore that breeds wanting additional stuff. So additional subsequent requests are made. That's normal. This back and forth is very normal where they ask for additional items not initially sought after. And then eventually there's that back and forth. And I'll make a comment on how frequently you should be, checking and sending, and you don't want to be nuts.
Well, but who does receive this information?
Once the student applies, the student is going to receive emails from the school, but often the student is also going to have login credentials to the school's own site and have a portal as an applicant, and is going to be expected to frequently check that site to see if there are any missing requirements, be it for application for admission or for financial aid. My recommendation is to have like a mutual time that works for the student and the parent, maybe once a week, where you're just taking a little housekeeping and going through the portals of the schools that have assigned login credentials, seeing if anything's needed, missing, seeing if a financial aid award letter is lurking, or check and check the emails too of the student to see if requests had come in during the week or if anything's missing. Here's another thing. Such requests will be made in earnest, but often such requests can be made when these requirements have already been satisfied, and that can be very unnerving. For example, long after your student has submitted a FAFSA, a school that they've applied to could say, well, could happen one of two ways. Either it will simply be like an email blast that will feel personal. It'll say, hey, it's time to file your financial aid. And you'll be like, what? I did that months ago. Don't tell me they don't have it, blah, 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 blah. Or alternatively, they could actually say, hey, John Doe, we don't have your FAFSA. And that is even scarier. But I'm telling you now, unfortunately, that is what actually happens day in, day out across the board, all the schools, when it's not true. It's just not a perfect system. And when a FAFSA and a CSS profile are filed, there are time and date receipts of these filings, and you can always pull up a PDF of the filing, and to such a questioning school, you say, hey, wait a second, this was filed back last November. Here's my PDF of the filing. You still missing it? And lo and behold, 99.99999% of the time, the school's like, oh, we have it. Never mind. Sorry to have caused all that stress and panic.
With that tone.
Yeah, I'm reading into that a bit, but that's how it plays out. So my cautionary tale to you is don't panic when that happens. Check it out. I've told you it's going to happen, so don't freak. You're just going to have to, see if you've in fact filed. But sometimes what also happens is you can file initially to the top, the 10 schools that your student is going to be applying to, like now, the 10 schools or so, or however many. And then a couple of months into this financial aid and application process, the student, either because they've heard back from some schools already or whatever, they just learn about a different opportunity at a school, apply to additional schools at some point during the year, but fail to submit financial aid forms to those schools. And that's another way that a school may down the pike say, hey, we're missing your FAFSA. So be careful and just make sure to cross your T's and dot your I's and keep all that, make sure you're submitting everything to every place that you've applied to.
There's always special things that can come up too, that you don't anticipate. So early on in the pandemic, we had a client who did not file for aid. They weren't our clients at that point,
right?
Because they thought they would never get anything. The kid was, going to college, and then what happened was they lost a big client. It was a software service company, SaaS, software as a service company, and they lost a big customer who accounted for something like 60% or more of the business revenue. It's a very small company. Also, that was split among like 3 people. So, big blow to the company. And then when they realized, as the dust was settling, that the money they thought they were going to be able to pay for college was not there anymore because their income, went from up here to close to zero. They said, "Oh, is there any way we can apply for aid?" And it was something like 7 days past the last deadline, something like June or maybe even July. So we tried unsuccessfully to go back and get them to waive that deadline, but they didn't. So the point is that even if you think that you don't need the money, but there's a remote but reasonable chance, especially if you're self-employed, that your income could drop, or something else could happen. Maybe you have a huge expense. Maybe it's a lawsuit. Maybe it's a catastrophic, loss somehow. Maybe it's a medical bill. Maybe you have to all of a sudden support parents or someone else. You should preserve the right to appeal your financial aid award, even if you're not going to get anything, because if that unforeseen black swan event happens, then you will be able to go back and appeal it. In this client's case, unfortunately, they could not do so. So that's a big bummer. All right. So when do people hear about their awards?
So,
and you talk about need-based, I'll talk about merit.
Okay. When one is admitted to a school, anytime between a few days to a few weeks after one hears, a financial aid package can be expected. If the student has applied early action or early decision, that package is likely, to be in maybe the December, January range. And then for all other decisions, it would be some days or weeks after the decision comes in.
If you apply and you're looking for merit aid, which again is defined as anything that's not need-based.
Right.
Okay. That usually comes simultaneously with the offer of admission or a few days after. If you don't get it, chances are you're not going to receive it, but it's still a good idea to lob in a question to the admissions officer who's assigned to you and just say, "Hey, what's my eligibility for aid?" And they'll either say, "I'll just wait a few more days," or "You didn't qualify for anything." Okay. What happens if you don't? Well, I guess maybe I'll ask this and I'll answer it. What happens if you get a crappy award, right? It's negotiable. So I've actually written a book on this. It's on Amazon. It's called How to Negotiate Your Crappy Financial Aid and Merit Aid Award. But the highlights are the best defense is a good offense, meaning that it's good to have a bunch of colleges that you're applying to that actually compete with each other. So it could be schools that are sort of looking for the same type of students. So Ivy Leagues compete with each other. The next tier down competes with each other. It could be schools in the same athletic conference. It could be schools that are reputable in the same area, like a communications or a biology department or something. So the point is that you want to have plenty of schools on your list that actually might compete with each other, because then you can play them off against each other and show. I like to show the offer that I'm trying to get school A, the top choice school, to match or exceed. So you can always appeal an award. You can appeal a financial aid award if you've had a change in circumstances, or they call it special circumstances. Sometimes you just write an email to someone in financial aid. Sometimes they make you fill out an application, some more paperwork, an appeal form. An unusual drop in income is a common thing. I gave that example before of the self-employed client that lost their big customer. So their tax returns that they submitted to the college didn't show that, because that was before the pandemic and before they lost that business. So the college is basing their financial aid offer on historical, retroactive income. So I think you covered this before. If you have someone graduating in 2023, they're going to be looking at your 2021 tax returns. It's a 2-year look back. Right. The government calls it a prior look back. So if things have changed drastically since then, that's grounds for an appeal. Another grounds for an appeal is an unusual expense, not a typical, I live in a high tax area. That is never going to be a successful appeal. Mm-hmm. Just in case any of you, are thinking about that, because we get that question a lot. So I'm guessing some of you might have that in your heads. It's got to be an unusual expense. Sometimes it's something else. Like last year I made a lot of money, but that's because I was laid off and I got a severance. I'm never going to have that again. Mm-hmm. Or I got an inheritance and I sold all the stock and I made all this money, even though that's not really how inheritances are supposed to work. So if it's a special circumstance, it's got to be something kind of dramatic or extreme. I probably wrote about 105 or 110 of those types of appeal letters last year. I'm probably going to do a similar amount this year. It's part of our service. All right, so let me just zip down 10 big mistakes to avoid. And I will pause just in case you want to throw in any quick lightning round commentary. Okay. All right. And we've talked about some of these already, but so treat this as a review. Mistake number 1 is blowing deadlines.
Don't.
Good. Number 2 is filing the wrong applications or not filing the right applications, depending on how you look at it.
Right. Some schools will only require the FAFSA. Some schools will require the FAFSA and the CSS profile. And touching on a question I saw in there, some schools will require the FAFSA, the CSS profile, and have their own institutional supplement. You got to file what the school's asking for. Good. Next.
Number 3 is mixing up parent and student items. Don't screw up that on either FAFSA or CSS profile or anything else. Here's one you spot a lot: wrong birthdays or social security numbers.
Yeah, unfortunately. Sorry, accountants out there.
So explain.
If I'm preparing the financial aid forms, I'm relying on your tax return and often a date of birth, etc. I find a lot of mistakes, unfortunately, either in a date of birth or an off digit on a social security number.
So the issue is not just sloppy. The issue is that when this all gets submitted, it has a ripple effect. Yeah, when this gets submitted to the colleges, it's gonna cause a red flag because it's not going to match up with the right. correct information. So the information that goes on the FAFSA, which is correct when Pearl does it, is going to cause it be discrepant from the information that is coming from the IRS.
Right.
And that could cause delays and you lose money potentially. All right. All right, here's one that we talk about a lot. Number 5, disclosing things that do not have to be disclosed. Yeah. Oversharing. Yeah. So I mentioned before on the FAFSA there are shelters, and 2 of the big ones, of the 4 big ones, are annuities and life insurance with cash value. If on the question on the FAFSA about your investments, you disclose you have annuities and life insurance, you're shooting yourself in the foot because those yep. are not disclosable. You don't have to share that. You don't have to share your retirement accounts on the FAFSA. No. Okay, so don't overshare because they're not going to.
You don't have to show the value of your house on the FAFSA.
Yeah, they're not going to give you. Well, you're not supposed to, right? So, right. So they're not going to let you make that mistake and say, "Oh, you got a do-over."
They can't unsee it.
Yeah, right. All right, next one, number 6, thinking you filed but you actually did not file. That happens a lot because of the signatures.
That's right. That's
so explain the signatures.
So there is a place to electronically sign the FAFSA application, and that is with both a student FSA ID username and password and a parent username and FSA ID username and password. Without those, and if there is any discrepancy in how those were made up, if there's any mismatch of a birthday or a social security number, or it's rejected in some way by the Social Security Administration, you're going to have missing signatures, and that could potentially cause delays too. So just again, make sure you do these setups right.
All right, so here, just to review the first 6: blowing deadlines, filing the wrong applications or not filing the right applications, mixing up parent and student items, wrong birthdays or social security numbers. Number 5 is disclosing things that shouldn't be disclosed, i.e. oversharing. Number 6, thinking you filed, but you didn't actually. Number 7 is not reading the directions, because all this stuff we're talking about is in the directions that are somewhat easy sometimes and somewhat buried at other times. Number 8 is failure to take advantage of legal shelters. So if you have an opportunity to take money from a child account or someplace that's penalizing you and depositing it into a, one of the 2 shelters I mentioned before, life insurance or an annuity, that might help you.
Right. For example, I was talking to someone earlier today who was considering trying to reduce the equity in her home. So, because she does not have a mortgage, so she was said maybe I should reduce that equity by taking out a cash, doing a refinance. And I said, sure, you should certainly do your due diligence, explore it, but there is a cost to that too. And if that cost is not greater than what you stand to gain in financial aid eligibility, you might want to pause.
Works for some people, doesn't work for everybody.
It depends. It really depends on the nuances of your own circumstances.
Number 9 is ignoring those post-filing communications. And number 10 is not filing at all because you think that you're not going to qualify. Someone told you not to bother. Every year there's these articles about the billions, like $3.8 billion that should have been claimed, but wasn't. So everyone should file, even if you think you're not going to qualify. When in doubt, I would say file. But not everyone does, and sometimes it doesn't matter. Sometimes it does. All right, here's something that gets overlooked a lot. Here's another tip. And I see some, keep throwing in the questions because we're about to get to them. Some colleges are more generous than others. Private colleges tend to be the most generous. So if you apply to a bunch of schools that aren't generous, which are generally state universities, then you're not going to get much money compared to if you apply to a lot of private schools. Private schools have higher sticker prices, but they frequently bring the net price down lower than state schools that have lower sticker prices but don't have any money to give. So don't rule out expensive private schools only because you think that you're not going to get a discount. And then there's the issue of colleges being generous to you, to your child, right? So they might be generous, but they're not generous to everyone that applies. They engage in something called preferential packaging. Those are for the kids that they want. So that could be kids with higher than the median SAT and GPA, but it could also mean recruited athletes, underrepresented minorities, low-income families, a few other things too. So, so just understand that A, that's a strategy, but B, that's also an explanation why you may not necessarily get as much as you were hoping in March or April when the financial aid awards come out. You've got to have a balanced and strategic list way ahead. Again, best defense is a good offense. Picking your schools strategically. All right, I mentioned merit aid before. My best tip for merit aid is you want to apply to schools where you don't have to scratch and claw and beg, borrow, and steal your way to get in. You want to be in schools where your child is in the top 10 to 20% compared to those competitors and the rest of that cohort. So if you look at last year's total amount of kids admitted and their median SAT or ACT and median GPA, and you're near the top, and the school gives merit aid. It's a private school that does give merit aid. They all publish their different scholarships on their websites, by the way. And then you have a better chance of getting money, as opposed to if you're right in the middle or below the median of one or both of those GPA and SAT score. It's going to be a lot harder. So that's the reality. You're more likely to get money from a school that wants you, as opposed to a school that is a buyer. They're not selling to you. They're buying. They're in the position of strength. You want to be in the position of strength. Real quick on the tax scholarships, and then we can talk about potentially working together. So go ahead. If you are interested in saving tens of thousands of dollars, having no stress about what colleges to apply to, or potentially essays to write, or applications, when to visit, who to talk to when you visit, and you want to save a lot of time, money, and stress, and do things the right way, then that's that's something that we provide. All the above, including help with all the financial aid applications and negotiating, but also we have a more comprehensive program that is designed to help kids figure out how they're wired, what that could translate into in terms of careers and majors that they could be both happy, love what they do, and make a living. And then that helps you get that elusive college return on investment that is so hard to get. Because you could get out of college and be one of those 41% of kids ages 22 to 27 doesn't have a job that requires a college degree, right? So that's our main thing, is to help launch kids for success after college. Even though we're college advisors, we care much more about the 40 or 50 years of their lives after college, not just these tiny 4-year sliver of their lives. So, so the comprehensive plan includes help with that type of launching for life success. And some people hire us as early as 8th or 9th grade. Most people don't, but if you have someone in the beginning of high school or the last minute doing their applications, we help them polish their essays, their applications, and all that. So that's all part of that service too. Either way, you just click on that green button, right? I think.
Yep.
And then you can book a call. The only thing I'll say is that we have a very limited. I think we have actually fewer spots available than what might be on your screen, because we ran this special offer last time I did this presentation, and we got overbooked. So we opened up some more slots, but normally we charge $750 for this initial consultation and strategy session. This is free, but it's 20 minutes, and it's either on the phone or on Zoom. And all that happens is, I kind of listen to you and try to figure out what type of help you're looking for. And then if we can help, I'll tell you, but a lot of times we can't help. If that's the case, I'll tell you not to waste your money, or worse to that effect. We're not right for everyone. We are not good with kids who are not motivated or coachable, by the way. Just had a situation with that a couple of days ago. So just to be very clear, even if you, mom or dad, thinks that we're great, it doesn't matter if your kid's not going to do the work and show up. We're coaches. We're not babysitters, right? All right. So the tax scholarship thing. So there are many techniques that your typical CPA for high income business owners does not help you take advantage of in a audit compliant way. So for example, there's a technique that we see a lot of doctors do, which involves taking their equipment and gifting it to their kids and then leasing it back from their kids. And what that does is create a business deduction and lowers the income that flows ultimately to the doctor, stuff like that. So it's got to be legitimate, but there's nothing, that's a totally above board type of technique. And that is something that we and our personal accountant, Rick, the legend, helps our clients with. So I'm not going to say much more about that, because there's a universe of like 10 or 12 different techniques that we usually pick 2 or 3 from, depending on the client. But if you are a business owner and you have a high income, then chances are that your savings is not going to come from the colleges unless it's merited, but it could also come from the tax code. And frankly, who cares? Who cares where it's coming from as long as you're getting the money? And I guess the last tip, which has to do with the services, is you have to get in. You got to get into these colleges, right? It's great if you're applying to generous colleges, but if you don't get in, then who cares, right? So that's really all about thinking about how to market yourself, because frankly, kids today, if you apply to schools that were ridiculously easy to get into when we were growing up, like Northeastern University, back in 1986 when I was applying to college, Northeastern accepted 90% of applicants, and this past year it was 7%, and they got 90,000 applications. I'm sure that 75 to 80,000 of them basically look the same. Upper middle class kids with low 90s averages and 1,400 plus SAT scores. So what you have to be thinking about is, well, why is the unsaid question in an admissions officer's mind, which is, why should we take you compared to these other 50,000 or 90,000 kids? Yeah. And that is fundamentally a marketing exercise, And look, I'm sure there are other college advisors who are at least as good as we are, and I'll concede maybe a couple that are better.
I won't.
But there are none that is better at marketing, right? So you see us do these these presentations. I've written a bunch of books. Pearl's written a book. We get on the news every once in a while. I was in that goofy Netflix documentary, Operation Varsity Blues, as an expert, not a suspect.
Yep.
Thank you. So my point is, I'm not bragging because who would give a crap. What I'm saying is, we're good at marketing our own service, and that is a life skill, just to come full circle. And that's what we help kids do. It's not just to get into college skill. It's here's how I'm going to be able to advocate for myself and be persuasive going forward.
Get into school, get my first job.
Yeah, have a good
navigate
career,
life,
succeed in my career,
get a promotion.
Yep.
Exactly.
So that is something that we not everyone agrees with us, by the way. So we're not right for everyone, but this is a marketing exercise, and that's a big thing that we help people with. Besides the figuring out what to major in and how to get in, and paying for college, and a few other things combined under one roof. So that's it. So
that's right.
All right, you want to go through some questions, and then we'll wrap up because we just hit the top of the hour.
Okie dokie.
And
here we go.
Yeah, you answer whatever you want, or tell me to answer.
Sure,
it's up to you.
Sure. Thank you. Question from Steve. Does this apply to people with existing loans, or will it also be for people who don't currently have kids in college?
Existing.
Yeah. Question from John. How about head of household?
Income?
Yeah.
It's going to be combined income for the entire household.
Chris, I see the information. I'm sorry. I see the formation of a new college industry to help people figure out loan forgiveness applications. Oh, okay. Yeah.
Yeah. We've thought about it, but unless the paperwork is too onerous.
Michelle, do Parent Plus loans have the same Pell Grants eligibility as our children's student loans? No. No, but the parent loan is eligible for $10,000 forgiveness. Yeah. There's not a Pell in the parent loan.
Well, so if you have a dependent child who got a Pell Grant and you also took out a Plus loan,
mm-hmm.
then the family will be eligible for $20,000 total forgiveness.
Yeah.
So as far as I understand.
The actual application is coming out, and I believe better details as to all these little nuances, which are not currently available, will become available in October.
Yeah, we'll see about that.
Question from Susie. Yeah, or theoretically expected to be. Is there any chance this loan forgiveness will be overturned or challenges, aka won't happen? Seems like a lot of anger over this.
Yeah, I think it's low chances that it won't happen, but there's it'll definitely be challenged.
Or maybe part of it will. Yeah. All right. Trisha, is the income for the student or for parents if the person is dependent one year and not a dependent in the other year? For undergraduate students, they're all considered dependents, even if they file their own returns, even if they're not on your return. As long as they're an undergraduate student and 24 years old or under, they're considered your dependent. So you cannot divest that dependency by just having them file on their own and not on your form. It doesn't matter.
The definition of dependent is different for financial aid than the IRS.
Lisa, my son is a junior in college. Is he eligible for the loan forgiveness program? He got Stafford loans. Yes. Christopher Cotoon, does owning a second home affect EFC? It does. Your primary residence, the equity in your home is not on the FAFSA.
It is on the CSS
It is on
profile.
the CS profile. However, an investment property that you own personally, the value of that home will be included on the FAFSA and, of course, also the CSS profile. Trisha, will this be available or will the answers be available later to these questions?
We're doing them now.
Yes. Okay. If my son, a junior who works during the summer and files taxes separately, does he have to show parents' income? Yes. If he's an undergrad, yes. If he's a grad student, no. Then it is based solely on the grad student's income. Stephanie, my daughter's in her senior year. Can she still apply for any aid in her second half of the year?
Yes, they may not be subject to this loan forgiveness, but yes.
Anjali, how do you address the EFC for high income? How do you address a family with high EFC?
Sometimes there are techniques that will lower it in a way that's meaningful, and frequently it's more about the other types of strategies to go after merit aid or possibly the tax scholarship if you're self-employed.
Christy, how can a family make an informed early decision without transparency in merit or need aid? Any advice? Our expected contribution makes me doubt any aid for my daughter.
Well, then I would make sure you have plenty of merit aid opportunities.
Right. Cast a wide net.
Yeah.
Charlie, does the forgiveness program apply to students who took the $5,500 loan for the fall 2022 semester?
Yes. If it's already in place, yeah.
Unless I'm mistaken, the very top schools, aka Ivies and top LACs, do not offer merit aid, only need-based aid.
Right.
Yes, that's true. And
although we've seen them, we've seen a lot.
We've witnessed
finagling.
Right.
We've seen
finagling where things are clearly not need-based aid, where they have wanted to help lure in a candidate.
Yep.
They have massaged the
we've played schools off. We've played schools off against each other.
Which unequivocally Ivies that do not, offer merit kind of do.
All of a sudden, they found financial need from literally from 0 to 7,000, from 7,000 to like 52,000.
It's a soft. We don't.
Yeah.
Can you elaborate on tax strategies for high income on W-2? Well, maybe and then
I can't do more than what I said because everyone's different and I'm not a CPA. But there are, like I said, I think it's a universe of probably 10 to 12 different techniques, of which for any given client it might be 3 or 4 ones that work.
Right. Yeah. And can you elaborate on insurance?
Well, not really, other than to say that life insurance with cash value is what I'm talking about, not term. Mm-hmm. So people sometimes will, and again, we're not financial advisors and we don't sell life insurance, but people will take money that they have in their kid's name or something, or their name, and which is penalizing them, and instead put that money, deposit it into a life insurance policy with cash, and all of a sudden that money is removed from their financial aid balance sheet.
Jennifer, so 529s are harmful for eligibility?
Yeah, so 529s either hurt you a little or a lot, depending on the school, but they are not exempt. That's one of the dirty little secrets about the 529. They're great savings vehicles, but for a lot of families, they actually reduce the amount of money they could get from colleges.
Yeah.
So it's either a little bit or a lot bit.
Question from Lisa. Are there any good websites for scholarships besides Googling?
I personally hate looking online for scholarships because there's a lot of scammy and time wasting type things out there. But we have someone who works with us with our clients who does a lot of she has a lot of interns basically who research a lot of local scholarships. So I think your best bet is the local stuff, not going after the stuff online that's overly competitive and everyone can find. I don't know anyone who's we've been in this college advising field for more than 20 years. I've never met anyone who has gotten a lot of money from doing what you're describing, going online and casting a wide net. It's very frustrating. That's my understanding.
Yeah. When doing the net price calculator, do you use the same year information you would use for the FAFSA? Yes, you should absolutely use the same base year. And if you're looking at a net price calculator for next year's aid year, you would use your 21 tax return.
Well, so those on the calculator, there are directions, and it'll specify what they're looking for. One of the problems with the net price calculators is that that information varies from school to school. So you may not get, that's one of the reasons you may not get the most accurate reading. Some schools may ask just for your adjusted gross income. Some schools may ask for your adjusted gross plus any retirement contributions you made, which is correct. So, it's garbage in, garbage out, but the directions will be very clear.
Can you share a strategy for divorced high income family on the W-2?
Well, on the W-2.
I mean, that's just what this question says.
The summary is that currently, if you have the ability to say that the low income, if one of the divorced spouses is lower income, that's going to be the right one to choose to file the FAFSA. Because right now the rule is that that parent who should file the FAFSA is the one that the kid lives with the majority of time. But next year it's supposed to change, and the parent that declares the kid as a dependent on the tax return is the one who should be filing the FAFSA.
Yeah.
So there's two different strategies there, depending on, but they all revolve around who has the lower income, and that's who should file the FAFSA. And that's there's more to it, but that's the brief version.
A question from Stephanie. I believe I missed the boat. I should have done a webinar years ago. Lockwood is wonderful. Thank you, Stephanie. That's not a question. Okay, question from Lily. What paperwork do we need to fill out the FAFSA forms? You're going to need. We talked about tax returns. Yeah, you need your tax returns. You need a good idea of how all your assets. You don't need to provide those statements.
Well, I think she means to fill out the FAFSA.
Right. Just
W-2s, 1099s,
yep.
1098s,
yep.
Any of your tax stuff, basically, you're going to need, and your statements, your bank statements and investment account statements.
Exactly.
And then there's a bunch of biographical stuff. You have to get the FSA IDs.
Yep.
You know, there's a lot of stuff.
Yep. Question from Lisa. So each school has financial aid form separate from the FAFSA?
Potentially.
It could. So
usually not.
Right. Usually no. Usually it's, they just require the FAFSA, or they just require the FAFSA and the CSS profile. And then a subset of those CSS profile requiring schools would have a handful have their own institutional supplement they want you to complete as well. Jennifer, can you please comment as to whether need-based aid is offered if applying early decision? Good question.
I don't like early decision for financial aid because you can't negotiate it too well as a blanket rule. So I'm not a fan.
Susie, do schools sometimes want extra financial info besides the FAFSA? Kind of like some schools have additional essays on the Common App. How much variability between schools on what is required for financial aid? It varies considerably.
Especially on the CSS profile.
Yes.
That's where there's a lot of supplemental questions.
Right. So there's the four corners of the CSS profile that go to all the schools requiring it. And then there's a section on the CSS profile called the supplemental questions section. Harvard has like pages and pages of these extra individual questions that only it is asking on the CSS profile. So there are a lot, and those can get really nosy and private and, deep in the woods and uncover, let's say, a lot of your financial stuff that maybe you were hoping wasn't going to be asked. But
like credit card balances.
Like a lot, yeah.
What cars you drive.
Yep, exactly.
And they ask because they can.
Right. Christina, I signed in late. Did I miss the info about the $10,000 student loan reduction? Yes. But if as a collected, if a family that earns under $250,000 will be eligible, for individuals who earn under 125, that's how that party would be eligible for the 10,000. Lisa, what do I need to contact Pearl for this year's FAFSA? Email me. And we will actually, Lisa, we will be reaching out and letting you know exactly what's needed. And you have a little bit of time as a returning student.
Lisa is a client.
Yes, Lisa, our client. Yes. Can you elaborate what you mean by a 2-year look back? Yes. So in October of 2022, this October, the financial aid forms for the 23-24 school year will become available. And on that financial aid form, we need to use the 21 tax return. So 21 is 2 years behind 23. That's the 2 year ago tax return that is needed for the 23-24 aid application. Retirement accounts also include IRA also? Yes, it does.
That's exempt.
That is exempt. But what is not exempt, oh, well, this doesn't have to do with an IRA. Never mind. I'm just going to. Shirley, financial and pre-read for athletes ask value of the house and mortgage balance. What to do? Provide it.
Yep. But be strategic.
Be strategic. You don't need to give your hope, wish, sale price for your home that you would hope to sell it for. You can, be reasonable and give a good faith lower estimate for the value of your home.
Look at the rules.
Yep. Dennis, if your students' grades are at the top of the school's accepted student profile, but their standardized test scores are at the low end of the accepted range, should you not report the standardized test score for a better scholarship offer, or is it better to submit the test score for scholarship consideration?
So if you're in the range for scores, I would probably submit them. Sometimes you can run that question by an admissions officer. I've seen that multiple times. Like I would actually ask the admissions officer from that school for advice. See what they say. They may dodge it, or they may tell you. They may say we can actually give you more money if you don't submit your scores.
Christina, total household loan forgiveness you said was $20,000. I didn't say that. How does this apply for divorced parents? Okay, I didn't say that. I said that if a household makes $250,000 or less, they're eligible for a $10,000 forgiveness, unless they have a Pell Grant, in which case they would get up to $20,000. Now, and in terms of the divorce, if one parent didn't take out a loan, plus loan, then there is not going to be forgiveness for that parent.
Well, assuming that divorced parent is the one we're talking about and got a Pell Grant, then you might get 20.
Right, because borrowing happens through the individual, not a couple. Debbie, is a student's required for graduation co-op money treated differently than any other student income?
Taxable income is what counts. So if that is taxable, then that's in play.
Neely, certain activities, leadership, extracurricular that bring more interest to soft aid. Are you going to are those leadership and extracurricular going to help get merit is my guess.
Frequently. Yeah.
And I think this is our last question.
Does it at the chat
from
or just
Susie?
The
I'm just looking at the questions, so I'll pop back over.
Last call though.
Susie, does it make any difference who the beneficiary of the 529 plan is? If we have multiple 529s for each kid, do they look at all balances of these accounts together, regardless of the beneficiary? Yes.
Yeah, because considered a parent asset for most schools.
That's right.
That gets picked up on the FAFSA and the CSS profile because they know that you can switch beneficiaries. That's the logic.
Okay, and I believe this is truly the last question. Gabriel, do parent student loans get factored into need-based aid decisions?
No, they don't. All right, we're going to wrap up because we went a little over time, but hopefully you guys found the time to be valuable and productive. We love doing these, and we love that you're here because, again, there's plenty of other things you could do. If you haven't started the school year yet, good luck. And if you have started the school year,
good luck.
Continue good luck. Yeah. I can't wait for all those first day of school photos, in front of the front doors. Yeah. Very excited to see that on Facebook. So, all right, guys, have a great night. Thank you, Pearl.
Thank you.
Bye,
Thanks, everyone. Take care.